Matron, take them away.
Oh, happy days, oh, happy days. It certainly is happy days today, boys and girls, because I'm currently on holiday in Jamaica. Just got my coffee, because we all know Scruffy likes a coffee. And I'm just going to have a quick little bit look at the shares, because Winky, love of my life, has decided that she's going to the gym. She's a strange girl, that girl.
You serious?
She really is. But on the other hand, I have to be careful what I say to her, because as you can see, I obviously go to the gym a lot as well. Well, not really. I think I've been once, twice, maybe 3 times in the last 45 years. She goes all the time, and if we got into it, I've had it.
Man, a stupid man.
Ow, you're hurting me. Stop it, Lois.
No, I'm...
But if I get into the charts, I get it. So what I'm going to do is I'm just going to kind of ramble on a little bit about small accounts. Now, small accounts are probably the most difficult thing to trade. And they are. And there's a number of reasons. Now, this year there is Traders Day Live Expo in London. It's June this year, 23. It's the biggest expo in Europe. And I'm a keynote speaker for that this year. And the subject that I've got to mainly focus on, I am there all day. I'll be on the stage twice, I think. I'm on the experts panel, and I'm also doing a talk on small accounts. And the reason they've asked me to do that is because it's something I specialize in. I'm very good at taking a small account and building it up into something that's meaningful. And that's what trading is. But what sets kind of my mindset aside to the person that's sitting next to me is I treat a small account as if it's a big account. Little acorns become big trees sort of thing. And that's the way I look at it. Whereas a lot of people, and I get mocked a lot on this share account, but its growth is huge. And it's now gathering pace. And that's why I want to show you it today. Because it is moving forward. Because once you start getting the wheels in motion, it just compounds and compounds and compounds. Now, this is all done on a single strategy. It's a strategy that you'll find in the Scruffy squad. And it's also a strategy that I've used to pass the 5% as prop fund. Because I've been asked that as well. Can you swing trade and pass on a prop? Well, the answer is yes, because I've done it and I've proved it. And I've shown my stats so many times. In fact, here's my stats from recent. And as you can see, good growth, good win rates, etc. Now, with swing trading, win rates is a bone of contention. Personally, I think it should be above 50%, because then that means you're right more than you're wrong. But if it's below 50%, it's not the end of the world, as long as your idea is sound, in the sense that if it's going wrong, you know to kill it. Because when you're holding for sort of multiple days and weeks, I can hold on average between 8 days to maybe 25 days. Depends on the asset and the trade. You can't predict that far in the future. You genuinely can't. When you're day trading, to have sort of 65, 70 plus win rate, I think that's the way you should be. Simply because to be able to predict over the next few hours isn't that hard, or at least it shouldn't be if you know what you're doing. All right. The hard part is you, and it always will be you. because you'll be too eager to get in. You'll be jumping from system to system. You'll see the profit and you'll snatch it. When it goes against you, you won't admit you're wrong. And all of these things come together. And that's what makes trading a small account difficult. And let me explain that one fully before we move into the charts. There's an attitude of, it's only a couple £100, you know, and that's what's happening with some of the messages and things that I get with this. Some are very supportive, some not so supportive, but the difference is the ones who are supportive understand that it's a growth for a future big account, whereas those that just mock it are looking for the fast buck. They're looking for quick money, and they're the type of person that will latch onto anything. As soon as they see somebody doing very well, that's the way. That's what you've got to do. Oh, well, that doesn't work very well for me. Oh, that one over there is doing very well. Right, I'm going to do that now. And they genuinely think 200 quid will become $1 million in a month. And that's why you fail, because you're not treating the account with the respect that it deserves. And respect is where it all starts. So let's have a little look at this, shall we? And we'll flick it over. Now bear with me, because I do have just a basic laptop with me on holiday. I haven't got my full rig like what I would normally have at home. So if the video is a bit jerky, don't worry. But what I will say about videos while we're touching on that, traders don't make film makers, and film makers don't make traders. So when you see very polished and glossy videos, always wonder how much substance is behind it. Mine, all right, I'm trying to get them better. You know, this is the old template because it's just my laptop and my portable trading setup. But at home, I'm trying to make it better, just so that it's easier for you guys. And just as a touch on that, we're also going to be doing Ask Scruff, where I'll be an open book. For an hour, I'll just let you ask me whatever. Send me an email. You'll find my contact details at thescruffytrader.com, or if you lose them, they're down in the description below. Just ask your question. I'll read it out, give you a little salute, and see if we can put you on the right path. And I'll give you sort of like an hour of my time, and I'll just tell you flat. And the cost of it is very simple. If you're a subscriber to the channel, I'll answer the question. So just come along, enjoy the live chat, subscribe to the channel, ask your question, and we sort it. How was that? Trying to bring trading to the real world and basically stop you going down the rabbit hole and losing your money. Right, let's flick over into where we're up to.
Well, we're waiting.
Okay, guys. This is the spreadsheet that I've been tracking this on. I'll drop it into the chart in just a second and show you exactly where we're up to. Now, at the moment, we've got a current balance of 160.10p, which has grown this month, and we're on the 14th of January, so it's like a half-month update of £23 worth of profit. Now, this is where people start having a pop and they go, it's only 23 quid. But it's 16% growth on the start of the month. And it's got a, well, the closing trades on this have an average hold of 23 days, 23 and a half days out of 15. And we have this very small position size of only 87p. But the win rates are up. The running win rate at this moment in time is 80%. But our closed win rate is 100, which it should be, because there's only a handful of closed off, which is there. But they've all closed in profit. Now, if I look at the summary, so I can see where we are moving, this is what I was talking about, starting to gather pace. Because when it started opening up, as you can see, there's an average hold of 23 days in the current month. It takes time for these to filter in. So it was natural the first month, which is December, would have terrible figures. But you get through it and it moves forward. Now here we go. Now look at the figures. Okay, they're starting to increase. Okay, we have 32% running, but our growth from the point that we started is 35%. So I'm 35% up from the 1st of December, and I just need to keep it moving slowly and slowly. Now this is the part that I want to work on, because I want that to get up over 50%. Now obviously at the moment it's up against the starting month, which would have been low, which was last month. But once we get over the next quarter or so, that'll start naturally increasing, and I'm quite pleased with it. So the figures are looking good. We're well in the green and we're moving up, and that's all that matters, because even though it's had losses and one thing and another, on £118 starting balance, it's put £41 worth of profit into it from pennies, because we're only dealing with pennies. So let's have a little look and see how this kind of works. Just open this up. Now at the moment, if I come down here, these are the current stocks that are on. I'm not opening any up till I get home from holiday, but I'm just managing these on a day-to-day basis. And as you can see, then they're all in profit, every one of them. So I've picked the right criteria. So I'm quite pleased with that. But what I also do, and what I wanted to show you, and this one here is kind of a half decent example. I start monitoring where I'm going to place stops. Now I monitor this and I don't want it to go below here. Now this one I've re-entered simply because it went up. I took the profit out, and fortunately I took it out on this level. It dropped and I've now re-entered down here. Okay, I've let it come back into trade and it's picked it up there, and now we're starting to move forward, and I'm going to watch this come back up. Okay, now what else have we got? So if we look at EO World, all right, again, this is another one. Took some profit out of it, closed it off because we saw these drops, and what they were is just the market doing what the market does. And if it stops me out but the criteria is still in place, I will look to start re-entering. Now what I'm doing with this little box is, that line is the 50%, so I can see where I've entered, I can see where I want to go to, and this will be where I'll pull the stop to when it breaks that level. That's what it's fair. So I'll pull that up and it'll just keep on working. And see what else we've got. So get rid of that. Not a lot on this one to worry about. ITV, just looked at. What else have we got? What's half decent? Glencore. Okay, let's have a look at Glencore. Put that on there. Right, switch these off so I can have a clean chart to show you. Okay, drop this down onto a 4 hour. I'm going to take away the 𝗖𝗢𝗡𝗖𝗧 and just put it into a standard candlestick. Now 𝗖𝗢𝗡𝗖𝗧, if I'm just looking to run something, I'll sometimes switch 𝗖𝗢𝗡𝗖𝗧 on. Let me show you that actually. What 𝗖𝗢𝗡𝗖𝗧 does is it holds the colors until there's a radical change, and it can help you stay in a trade longer. And I sometimes put it on just to see if there's a run and whether or not I want to follow that run. But personally, I prefer this. Right, so let me show you what that green box does. If I mark this chart up, which I will be later on today, just putting some key levels where I want this to go, I never really want to give away more than 50% of my profit. All right, not, well, I'll rephrase that. I want to see it moving first. Once it's moving, I don't want to give 50% away. Now this is starting to move. It is risk-free because there's the stop there. So it's come from its entry point and it's rattled away and it's got me to a safe position to move forward. Now if I put on a drawing tool, a measuring tool, from there up to where it's mostly been, that'll show me where I can place my stop. Now as you can see, it's got a grey box on this. I can't get it up to there. All right, so I'm just going to leave it underneath this grey box. It's risk-free, but I'll be trailing this green box up as it goes. But that's my marker for the stop. So as this moves up, I'll get it to there and the stop won't go above it. And the idea is it means the trade always has somewhere to move. Okay, so let's have a little look, see what else this has done. Well, in the last 24 hours it hasn't done anything. Obviously I'm on holiday and it is Saturday morning, but let's have a little look at something, because it's all well and good seeing sort of my spreadsheet, but I just want to show you something. Okay, we'll switch this on. Now I prefer to work this out myself, so I don't show this that often. But as you can see, we have a wonderful growth. There's the funds, as you can see, showing that my sheet marries up. Now over the period it's only had like a couple of blips, but from realized profit, etc., it's showing that the profit and loss ratio is 2.2, so that is very good. So I can live with that. So it's 2-to-1 ratio. No, it's more than 2-to-1 ratio. The win rate's running at 64%, but the return rate, which is what's important, because I really don't give a toss about this. I think risk reward and all of that sets you up for a fall. Every trade should be unique and taken on its own merit. So you will put X amount of money on the table to earn X amount of money. And that's what my spreadsheet's all about, because if you notice, it's not really based on pips and anything. It's based on return on investment. So if I put £100 on the table and I get 110 back, what that means is I've had my investment returned and I made 10%. Okay, that's kind of the way that I look at it. However, if I cut it short but I get my margin back, I still consider that a good trade. Okay, as long as I don't lose money, it's a good trade. Okay, the part that I pay attention to is this one. So if it's more than one, it means the strategy is robust and moving forward. 2.11. Okay, so that all marries up with what I show you on a regular basis when I show you my stats, etc. Because do pay attention to return rate. I always have a good size return rate.
Good job.
So there you go, guys. Life's pretty good with the shares. I'm very pleased with it, and we're going to keep on running it through the year. And the idea of that small account is to trade it up to pay for the next holiday. Now, I should have been in New York for this one, but Winky in her great wisdom decided that she wanted some warmth. So the last time you saw me trade up an account where I was supposed to be in New York, we're actually here in Jamaica instead. So these small accounts are worth it, and they can bring you, well, just a reward to make your hard work pay off. And that's something I want to leave you with. If you're going to trade, trade for a reason, not just, I want to be rich. You want your reason to have some kind of, how do I put it, be goal related. If you've got £100 and you want a new video game for your kid, well, they're about 50 quid. Well, trade your £100 till you get your 50 quid and then buy that game. And what that'll do is every time you see it, you'll know trading gave you that, but it's realistic to the size of the account. But if you put a couple of £100 in an account and think you're going to be giving up your job at the end of the month, it's an unrealistic goal. It means you'll never achieve it. And that's what small accounts are. You know, you have to build them up. So if you have a small account and it gets you a game, brilliant. You have a little bit bigger account, gets you a weekend away, brilliant. The next size might give you part-time income, all of this sort of thing. And the one part that I want to leave you with is your position size. If you put your position size on too big, it'll destroy the account. So again, it has to be realistic. You can have a £10,000 account and it sounds like it's a massive account. And in fairness, it is. It's pretty good. But if you're trading anything past £10 a point on that, you're going to blow it up. Because trust me, it doesn't take long for numbers to rack up. If you're on £50 a point, you know, every time that moves against you, that's 50 quid, you know. You do 10. You see where I'm going? You know, what if you're 100 points offside? You know, that 100 points at 50 quid, it'll just destroy that account, you know. And it's very easy to go 100 points offside. So, again, just be careful, guys. Charge your account with respect and keep the position size small. And as a rule of thumb, I work to 50 pence for every 500 of margin. Okay, roughly. If I'm confident in the trade, I'll push it to £1 for every 500. So all that means is, if I've got a £1,000 account, I can put a couple of quid on. That's it. That's as big as my account can be. My position size can be. And if I'm unsure, well, it'll only be £1. You know, 500 with 50p, 250s, £1. Then I reduce that by breaking up the position into 5 chunks. So my first position would be, say, 20 pence, second one, another 20, and I'll build up into £1. That reduces exposure and increases the upside profit as well. So all these concepts that you need to take into account, because ultimately, X doesn't mark the spot. So there you go, guys. So drop your emails to me, drop your messages. I'm very easy found. If you like the videos that I do subscribe, follow me on Instagram, all that sort of crap. I'm not very good at social media, but it's a good way to contact me, and I genuinely respond to every person who contacts me. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.